This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and today I'm going to try and show you the difference between just a pullback and when we're actually changing the trend. I had a specific question about this, and this is difficult. This is not necessarily something that you can define and say, if it does this, then it's always this. It's not going to be, it's not 100%. You have to use all the tools at your disposal and all the different patterns that I talk about in my book and a lot of these videos to help you decipher on that smaller time frame. This is a 2 time frame pattern, and the higher time frame is pulling back, and the lower time frame you're trying to determine, is it just a pullback or is it shifting the trend? And so let's go ahead and get into the example. I'm actually going to use Adobe, but I'm using it in several different ways. I've got a weekly on the left and a daily on the right. And, one of the things is, so I'm going to look at this pullback here, and then this pullback to the downside here. And what I want to do when I'm looking at the smaller time frame, so this pullback corresponds to this one here. And in fact, I'm going to just draw this in so you can see. Okay, so I've got a stock that is pulling back to its moving averages. Now, there is something very important about this, and the reason why I've got these side by side, because if I'm looking for a shift to determine a pullback to get in this trade, and whether it is a true trade, then I'm definitely looking at this time frame and what's going on this time frame. I can't just make the decision based on the smaller time frame as to whether, okay, this has gone like this, that's a reversal in trend, because a lot of times you'll get a stock that is moving up that will break its trend line, and then it will make a lower high and a lower low, and that looks like a change in trend on this time frame. But the reality is the higher time frame has an 18 like that and a 40 like that, and this is happening above that, and this is just a pullback into the higher time frame trend. So you have to be really careful about thinking that a 1, 2, 3 shift in trend automatically means that the trend is turning down. If you're fighting the higher time frame, if the higher time frame is up and you think you've got a 1, 2, 3 to the downside, you have to have serious evidence based on the MACD and the ADX to support that thesis. Otherwise, it's probably not true. You always go with the higher time frame. So that's my first piece of advice on this. Number 2, so in this case, we had a drop, and then we made a lower high and a lower low. That's really all we did, was an ABC decline. To me, even if we have a trend line or anything like that, that's just not enough evidence that we've shifted down to the downside. And obviously, we've pulled back to 2 rising moving averages on the higher time frame. We have a pinch play here. I mean, I'm predisposed, just based on this decline and the fact that the ADX was not very strong in the decline, that this is just a ABC correction and not a reversal of trend. Now, if we go up and then come back down and make another lower high, and another lower low, then I would say, okay, we've got pretty strong evidence that the trend has shifted on the lower time frame. But if we do that, in most cases, you're also going to be breaking the 18 on the higher time frame. So you want to use this in conjunction. You want to use the 2 time frames together to help with this determination. Now, there's a third component that I like to use, and that is, if we've done this and we've come down, if we go into the zone between the 18 and the 40, the 18 is crossed down below. So we're starting to get kind of a bear alert because the 18 is crossed down below. But do we have true evidence? Did we go into the zone and then go to a new low? So if we go into the zone between the 2 after the 18 is crossed down and we go to a new low, that's pretty strong evidence. Now, it can't just be a minor new low. You can't take this out by just a hair and then turn back to the upside. That's not enough. we have to have pretty convincing evidence after going in between the two, going in between these two, going to a new low. Then I have another piece of evidence that we've confirmed. And sometimes it might not be crystal clear whether you have a true wave in price or not. And if you're having a hard time with that, I think the moving averages can help in that confirmation. So use all of these things at your disposal. This is why I think the moving averages are very helpful with price structure as well. MACD can also be useful. Do you get a full-fledged test of the zero line after breaking? I mean, these are small things. If you notice, we overran the zero line, but then came right back above. That wasn't really a true test and break of the zero line. In my opinion, we overran it and then we turned back above. So these are all minor things. Now, if you notice, we just broke the trend line and then turned right back to the upside. But in this case, we don't really have a shift in trend to the downside. You see how we just did an ABC down? So we don't necessarily need a full trend back to the full shift, ABC, a break of the trend line, and then another higher high and another higher low. We don't have to come in the zone because we never came in the zone and shifted the trend to the downside. So now we don't have to necessarily do that back to the upside. Hope this is making sense. So in this case, I'm not really reversing the trend because the trend never shifted back to the downside. So in this case, I could play this pinch play right at the zero line as this turning back up to the moving averages. I could take the moving average cross here. I could wait for this to pull back and hold and turn back up and do the pinch play, or I could take the trend line break and then the test and then the move back up to the upside. All of those are confirming shifts back to the upside because I never had a confirmed shift to the downside. Let's go ahead and look at this next example. So in this case, we're moving up and we pull back. Now, this is a really harsh pullback that takes place. You see how harsh this decline is? But it's not a shift in trend. It's an ABC. We pulled in to the zone, we rallied up, made a lower high and then a lower low. So I can do this pretty simply and say, okay, we did that. Now, if you drew in your trend line, you'd have a 1, 2, 3 to the downside. And yes, it might be a tradable play, but notice what the higher time frame is showing. Both these moving averages are still rallying to the upside. They're still rising to the upside. This is just a pullback. It is not a shift in trend. And so you have to recognize that. And violent sell-off. This is not something that I'd probably go jumping right back in. But the reality is that I wouldn't consider this a shift in trend. And notice also that we didn't go in the zone and come back out. We didn't get our second lower high and second lower low to confirm the shift back to the downside. So Linda Raschke actually refers to this as a long liquidation flush. We're getting a flush to the downside, but it's still a uptrend. We're still in an uptrend, but it had a really violent decline. And really, if you go and look at the 2020 bear market, we kind of had a similar situation. It was really a long liquidation flush. It never truly shifted the trend back to the downside. Let's look at this final move. Now, at this peak, we make another new high, and I can draw in the trend line here. And we broke the trend line, we tested, we came down and made a lower low, and then made a lower high, and then another lower low. So we shifted the trend to the downside. I mean, this is truly a shift based on a 1, 2, 3, followed by a second lower high and a second lower low. Now, if you notice what happened, and this is where this is more of an art than a science. You see how this doesn't constitute going in the zone. We didn't cross below and then go in the zone and come out. It did it early. It actually went in and tested the 18 before it crossed down below. But in my view, that's close enough. That's a close enough shift to the downside where we tested the 18, even though it hadn't crossed down below the 40. It was very close. Most of the time, it'll happen after that happens, and then you go down and you get that confirming evidence. But you just kind of want to be aware of that. Use the 1, 2, 3 together with the moving averages and see if you can get clear evidence. Now, the other thing I tell you is Look at the higher time frame. If these moving averages are still rising and you still have evidence that the move is to the upside, and you're holding support or you're holding these moving averages which are rising, then don't be too quick to believe that the trend is shifting to the downside. The other thing is use the MACD and the ADX to help determine whether the shift is taking place or not, and whether you have an uptrend or a pullback that's just a simple pullback, or if it's actually a reversal of the trend. So hopefully these different examples are helping you understand this. But it's a complicated subject and it's not crystal clear every time. So it's the more examples that you see, the better you can do. Use all the tools at your disposal, and it should help with your win rate and seeing these a little bit more clearly. Talk to you next time. Go ahead and post any questions. Thanks.